Good morning, everybody. My name is David Hensey. I'm with Coleman Agriculture and the Hop Growers of America board, and it's my privilege to kick off day two. We're excited to be here. We've got some great things to listen to. Of course, we'd all love to be together, but this is actually turning out pretty good. I've spoken to a few people, and we have, you put your full attention on the speakers. So I'd like to mention that today's sponsor is Rabo AgriFinance, and we'd like to thank Rabo AgriFinance for helping making this year's convention possible. As we get into this, I want to do a few housekeeping tasks. As you're listening here, you'll see on the bottom of your screen there's two tabs. There's a chat tab and a Q&A. So Q&A or questions and answers, that's the one you'll enter any questions that you would like to be answered. On the chat, if you're having any technical difficulties, you can put in a message there. Also, if you want to add some commentary, for example, like, you agree with something that the speaker's saying and you think it could add, that can be put into a chat. So anyway, as we go, I'm excited about the opportunity today to present Jim Watson, and also that we'd like to thank Rabobank AgriFinance again for sponsoring Jim Watson's important message on what the beverage market will hold for us. Just as an introduction, Jim is a senior analyst with Rabobank Research Group covering North American beverage sector. He's based in New York. Jim leads the research efforts in beer and non-alcoholic beverages in North America, building on Rabobank's presence from the farm level through the entire value chain, and works with clients on everything from understanding new markets to strategic planning and M&A. Jim, take it away.
Thank you so much. Hello from sunny and cold New York City. Welcome to day two, everyone. I'm Jim Watson. So I do beverage research at Rabo. I spend a lot of time on the beer world, but I also do cover a lot of other beverages. So I want to take you through what happened in 2020, give a little bit of an outlook for what we expect for this upcoming year and further out than that, and kind of see where what we've been seeing in the beer world fits in with what we've been seeing in other beverages as well. So I'm going to leave a little time for Q&A at the end. So please, if you have any questions, I'm very happy to answer them. But we can go to the first slide, please. And what I want to talk about is, the overview of what we're seeing kind of for all beverages. And so this is just like the most basic measured channel sales view. And I want to see, basically how wild was 2020, right? So 2020 was the dark orange bar here, and it really stands out. What this tells us, looking back, beverages is a really consistent category in a wonderful way. Most years, the growth in every category, non-alc, alc, was roughly kind of flat to up 5 or 6%. A few categories might be a little bit exceptional given at a certain time. Energy drinks would stand out a little bit, but 2020, the growth rates we've seen in measured channels kind of makes that all, much clearer on this chart. And 2020's growth rates in measured channels obviously is not a wonderful strength of the beverage category, but it's a strength specifically in measured channels as so much volume came from the on-premise into the off-premise. Beer has performed roughly as well as wine and spirits. Alcohol generally outperformed, soft drinks, at least in terms of measured channels last year. Worth noting that a lot of what we see, I can talk about the consistency of these categories, but within the categories, things can change a lot. So certainly, within beer, a lot of the growth we see is hard seltzer growth as opposed to, traditional beer growth. Similar things happening in other categories as well, where the overall number may look pretty consistent, but what's going on behind the scenes is, actually fairly vibrant change. But one of the most unusual things, if we go to the next slide, is, last year we entered a recession. As an analyst, there's an obvious, you look at a recession, you say, okay, so we're going to see a lot of pricing pressure this year. We're going to see people trading down to lower price categories. We're going to see companies look to drop their price. And of course, what we saw here was really the opposite. Prices went up in 2020, and they're, in measured channels, they're the highest prices we've seen over the last 5 years. And those price changes look pretty consistent, right? Pricing has been very consistent for a while, but an additional 1 or 2% in prices, a fairly significant change in terms of what a consumer sees and what the entire supply chain sees. A couple of reasons here. One, this is an unusual recession, and I'll talk a little bit more about that later. A lot of this came down to there's so much traffic, foot traffic in grocery stores and in big box, which is the measured channels we're talking about here. That discounting kind of disappeared last year, so it's definitely worth saying 2020 was just unusual in so many ways. In measured channels, looked really great for everybody, but great to see that pricing was there. And that's sort of, it looks like premiumization, basically, and that's the opposite of what we'd have expected in a year like 2020. But we really, that finding that we saw what looks like premiumization across a number of categories was pretty robust. So if we go to the next slide, this is wine data. This is 19 wine data, but 20 wine data is basically the same. And so part of this is it's a long-term trend. People paying more for certain goods. I just wanted to show that in wine that there's a massive move up. Interesting that did not stop at all last year. And that's something, of course, we noticed through the COVID period that a lot of the trends that we saw going in were simply accelerated as opposed to reversed or turned on their heads. And if we go down to the next slide, I pulled out a coffee slide here, and to explain what you're seeing here is I've broken out total coffee on the left, but then 4 other subcategories of coffee. Whole bean coffee, so that means you're buying the whole bean, you have to have a grinder at home. This is by far the most premium type of coffee. And so what we saw is, the growth had been okay going into COVID, but growth for whole bean coffee really spiked post-COVID. And so whole bean is generally specialty coffee. The only reason you're buying whole beans, so you have to go through all that extra trouble of grinding it yourself, is really because you're buying something that you think is an exceptional bean and you want to capture those unique, varietal specific flavor notes out of that coffee. And so this is kind of the first time in a recessionary atmosphere where we saw consumers, certainly in the coffee world, bringing specialty home with them, right? Traditionally, this would be just something left to the on-premise, to the experts, right? And you're not doing as much at home. So it's not just premiumization, but it's consumers who are really looking to take that, specialty experience or that craft experience and bring it home with them. If we go to the next slide, it gets into some of our kind of overall viewpoints on what's going on this year. So the biggest view I have when we're thinking about COVID is nothing of what a consumer really wants has changed. So in that coffee world, if they wanted a specialty Kenyan coffee, with certain notes of blueberry and black tea, they're going to get it. They're going to search that out no matter what, and they're still going to want that. And the same thing goes in beer. If you have a core craft beer consumer that loves a certain hop profile, certainly nothing about COVID would ever change that. But something did change, right? So what changed was how and where consumers can buy all of this. And of course, that makes a big difference. We saw the changes in measured channel sales, right? Consumers who wanted if you want the exact same beer, now you can't get it at the normal place you get it. You're searching out new avenues for it. But of course, that's a messy process. The tap room where you go and you bought your flight of beers, you simply can't recreate that in a big, Kroger, right? And so a lot of, what we saw last year is how awkwardly your consumer desires translate from not being able to get something in one channel to getting it in another. We also saw a long-term impact, certainly on the on-premise, on social gatherings, and we'll talk a little bit more about the recovery we see for on-premise vendors, but it is fairly significant in terms of the biggest changes we've seen is how companies and how beers get to market, but not necessarily the type of beer we want a consumer is looking for. So the consumers are just, you kind of squashed like whack-a-mole, one main way for consumers to find their beer, and then it's popping up in all these different places, certainly e-commerce, one of them that we'll talk about a bit. But go to the next slide. It just always worth saying within the world of alcohol consumption is staying fairly flat. This goes back a long way. This is just showing, certainly, beer slipping a little bit in the per caps. This is a volume-based one, so pricing has been much stronger. But overall, the consumers are all there. Nothing about, again, 2020 is going to change any of this. So consumers are there. The same drivers that were, perhaps pushing wine up, and some of this is, could be pricing. Some of this is, availability to younger consumers in new formats. Those are all going to stay very constant. But I want to talk about what we've seen in terms of changes in beer brands. So if we go to the next slide, and I cheated a little on this slide. I had this slide last year, so I want this as the baseline. These were the biggest gaining beer brands in measured channels. So these are the gains in absolute dollars, which means this is kind of geared towards brands that were already, fairly large. So the biggest dollar gains per brand. And what we see in this chart from 16 to 19, so a 4-year period, seltzer, and we see the new set of light lagers. So the first two were Mich Ultra and Modelo Especial. So, a little bit of a change in the guard over that period in terms of, but still, classic lighter beers. But there are a couple notable differences now if we look at what won in 2020. So if we go to the next slide. In that next slide, so some things remain the same. Seltzer is still right here at the top of the chart. And in fact, I would even say, seltzer took over everything, right? So there's more seltzer on this chart. All we have is White Claw and Truly, and they take up kind of like 5 or 6 of the top 15, top 12 spots, right? Mich Ultra, Modelo Especial, still there. So a lot of things actually stayed fairly consistent in 2020. The biggest, most notable change on this is Bud Light, Miller Lite, and Coors Light all showing up on the top gainers chart. And we have not seen that in a decade plus, right? That's a massive change, actually, in what consumers want. And so I would actually say, I'd go back and say, that isn't a change in what consumers want. That was a change in what was available to consumers. So 2020, a lot of what we saw in terms of sales may not have reflected any change in consumer demand. I don't think consumers want that kind of classic generation light lager represented by those brands any more in 2020 than they did in 2019, and I don't expect them to want it anymore in 2021. But when you were shopping in a big box store and you were shopping for a big size and you wanted to get in and out of that store quickly, that's quite frankly what was there. And so we saw a lot of sales last year driven by simply where consumers could find their beer and where they felt comfortable purchasing it quickly. So, it's kind of fascinating to see these brands that have been in decline for, many, many years come back and all be in the top 12, in 2020. That's probably a trend that's not going to continue, whereas the trend towards, newer, kind of the new light lagers and seltzers certainly does not seem like it's stopping anytime soon. And we would expect that most certainly to continue. But talking about, channels driving what people buy is really important. And so we should talk a little bit about e-commerce. So if we go to the next slide, this is a chart from 2019, kind of looking at just the overall alcohol. So this is not beer, this is all alcohol, which is relevant because beer has been traditionally a tiny part of the world within alcohol e-commerce sales. And breaking it down into 4 different categories, you can see that, specialty retailers, and you can see the examples of which ones, so you kind of can get a sense of what these are. And direct-to-consumer were really large, whereas online grocery and marketplaces like Drizzly were much smaller. What's interesting is there's a case to be made for massive growth in each one of these segments. I think what stands out to me is how much the really small players like online grocery and marketplaces, how much room they do have to grow. It's certainly tiny, and even within those, how they grow will be different. Will be very different, right? So if you thought of the growth of GoPuff will mean different things for different brands than the growth of Kroger online. Equally, the growth of Whole Foods will do different things for different brands. Certainly, as those categories get big. But online grocery, beverages have lagged massively behind food in terms of online grocery sales. But there's a lot of energy certainly going into that category right now. So we do expect, a lot of growth from these categories and a lot of corporates paying attention to them and then finding ways to grow their brand. So this is not just a sales channel, but this is a growth and this is a communication with consumer channel. So finding ways to really utilize these categories to reach their consumers. And this was something obviously super accelerated by COVID. And if we go to the next slide, this just shows a few, this was from April, so super early on last year, some of the growth rates in different types of channels, right? And this was a little bit more kind of, has some wine examples, so a little bit more wine-centric, but the growth rates were unbelievably massive. What's amazing is the growth rate didn't necessarily slow all that much last year. We've basically, it seems like kind of 5 years of e-commerce growth has been packed into 1 year. But what we've seen behind the scenes is a real notable change that, from a corporate strategy side, where e-commerce was seen as something you had to have like a small team doing it just because it was kind of a thing. But they really had to fight for money and fight for resources. It's kind of changed, and now that's like put on the front foot. This is someplace corporates are really actively investing, actively assuming there's going to be a lot of long-term growth, trying to figure out which channels they play best in. What I think is interesting is e-commerce naturally plays a little bit more to the long tail, and that's partially the infinite shelf. Is partially the search functionality of being able to look for exactly the things you want on e-commerce. And we've kind of seen that across a number of categories. So as the on-premise was hit, as I said, consumers who wanted a craft beer or a specialty coffee increasingly had to say, like, wait a second, I used to go to my local place, right? Whether that was a local bottle shop or, the tap room of my favorite local brewer. I can't do that anymore, or it's really difficult. So I'm going to start looking for that online. And so it really created this kind of, wonderful cycle. A lot of people signing up for things, a lot of marketplaces signing up new brands. It's really accelerated, and it does seem that happened at the same time that retailers were cutting their SKUs, right? So they were eliminating some of the long tail because they had so much traffic coming through their stores that they needed to focus on pure efficiency, just getting the top selling brands on the shelf. So we saw a little bit of kind of bifurcation of where the long tail sold versus the largest mainstream brands, and that's something that we might see accelerate a little bit in future years. Though it's worth saying, online grocery is, if you're just buying all your groceries online, you're still going to be, if you're a Bud Light drinker, you'll still order a Bud Light there. It's not as if it's going to be all or nothing in one channel. And as we're talking a lot about how consumers are changing, based on what channel they shop in, it's worth noticing that the consumer themselves is really changing right now. So if we go to the next slide, this is who's shopping. It's kind of relevant to lead in with e-commerce, because you think of e-commerce like the first adopters are really, young people, tech savvy. And of course, COVID wiped that all out, right? So, everybody had to shop online if they felt uncomfortable going to a grocery store. And what's interesting is the alcohol shopper, and this is across all categories again, is getting a fair bit older. And you can see, kind of the two dramatic shifts in that left chart are, the youngest consumer. So this is, for our sake, underage drinking. So wonderful to see a massive drop there. And it's interesting that the spike we see comes in the oldest consumer. And a lot of that, the oldest consumer, comes with the, perhaps more people drinking in general, as opposed to the same number of people drinking more. But there is a fairly large increase in the consumption rates for 50 plus. And you can see the same thing. So the left side is volume. On the right side, we're tracking spending. And we kind of see the same thing, that spending for older consumers is really going up as well. And so it's not just there's a little bit of volume, but then those consumers are also spending more on their drinks. And so, of course, this makes a big difference to, what you're selling at what price and how you're marketing your brand. This is a fairly consistent finding. So, right, that these charts are, the one on the left is from 2007, then 13, then 19. This has been going on for a long time, but it's really starting to accelerate, where you can look at the percentage of drinks coming to over 50, and you may think of every commercial you've ever seen for an alcoholic drink, and it seems like it appeals to 20 and 30. But older consumers are drinking more, and it doesn't mean that they're necessarily a totally consistent brand loyal consumer either. There's equally experimentation in that group. If we go to the next slide, not just age, but it's worth thinking about how who is drinking is changing a lot. So I think I showed kind of an early version of this last year. So we broke it down a lot more, and this is the number of drinks that someone has in a month. And we just, my colleague, Ricard Nessen, released a great report on demographics that has a lot of this data in it. So, happy to share that with you if you email me after. I thought this was fascinating. So much of how we think of the drinks industry and how we market it, and how we picture our consumer, or who we put as the face of our own brand, reflects that, it's a white male industry. We've seen massive change in that. And so, who's drinking beer is rapidly changing. That's going to change where they get their beer, what kind of beer they want, what the flavor profile is, what the ABV profile is. There are going to be differences as this change, and it's worth noting some companies are starting to recognize this, but this is a fairly slow process that is really changing, how we drink. And of course, it makes it, as the drink, the drinker universe expands, right, to match the population more broadly. The number of brands and the kind of concentration of big brands also declines a little bit. So if we go to the next slide, I just pulled up, so this is a chart of the combined market share of the top 3 brands in each segment. And so what we see is, virtually every segment has gotten less concentrated. So the top 3 brands are smaller than they were a few years ago. And there are a couple exceptions there. One, like wine and juice, those are very fragmented industries anyway, so they didn't really change. Vodka, interestingly, didn't change, but that basically is all a Tito's story. That got so big in the last 10 years that it makes it look just as concentrated, but the rest of the industry fragmented. This is a trend, again, we don't think we've seen the end of, right? So as a consumer base diversifies in terms of who's drinking, we expect products to diversify as e-commerce gets easier, and it gets easier for everybody to find exactly the specific thing they want. We expect, kind of the size of the biggest brands to keep dropping. The ones on the right that are really the most concentrated categories, you can also think of them as kind of, the newest categories, and even they are kind of rapidly coming down in terms of market concentration. And both energy and sports drinks have seen some, with Bang and Body Armor, major new competitors come in and take a lot of share. So there's rapid diversification going on there, but this is certainly a long-term trend, and we don't think that that's going to change. One of the interesting things is how corporates are addressing this, right? Because it used to be that a corporate would say, okay, like new brands are capturing a lot of growth, long tail, so we're going to go and invest in a number of startups. We're going to buy some small brands and kind of see what they can do. If we go to the next slide, there have been a bunch of examples recently where it seems like the big corporations are kind of actually changing the strategy, and this has been fairly notable. So Coke sold Zico back to its original founder just very recently. Hershey sold Crave back to its original founder. So these were bets they made in emerging categories that they said, after a while, they're like, okay, it turns out that's not our category. We're not going to be the ones to, get really meaningful scale out of this. This isn't for us making this, kind of small bet. The other two, the recent beer examples, you could look at something like a Sufferfest and say, okay, we're making a very small bet in this kind of, not even niche anymore, better for you beer segment. Or what we're seeing is companies reversing and starting to make bigger bets and just say like, okay, we could do that, or we could just ride our hazy that's growing, near triple digits and, focus all our energy there. So we're seeing this real move from corporates to say, okay, our growth can come both internally, but it can come from bigger bets on, more concentrated, parts of our portfolio. So if you go to the next slide, just a Coke example, because they laid it out so obviously. Odwalla was another brand on the right that they recently discontinued. They bought it for near $200 million about 20 years ago. And eventually it stalled out, and they just said, you know what, like better for you juice is just not a category that's particularly interesting to us. And so they just flat out discontinued the brand. But why they did is what's on the left, a realization that, less than half their portfolio provides virtually all of the revenue. And so that same SKU reduction that we saw in grocery stores is kind of coming back to the company portfolios themselves, as they say, like, wait a second, we don't need to be quite everywhere and everything to everybody. We can at least be very strategic and just say, like, listen, we're willing to make a bet. If it doesn't work, we're willing to get rid of it. We're willing to say, constantly have a focused portfolio that really gets our attention. And in this case, willing to actually cull brands, not even just hold on to them with minimal investment, but just say it's not even worth it to invest in these brands. And I think that's a trend we're going to see a little bit more of. So this doesn't mean that they won't keep expanding. Certainly, Coke just expanded into hard seltzer well outside of its, base competency. But they did that in a realm where they said, okay, no, this is one of our core bets that we're going to make, and we're going to do that while getting rid of a number of other brands. And so it gets into the world where a lot of the growth drivers are changing a lot. So if we go to the next slide, I won't stay too long on this slide, but it's non-alc, and it shows basically the left is the current state of the market in terms of share by category of non-alcoholic drink. And the one on the right is the Euromonitor projection of where growth is going to come from in the next 5 years. So you can see, a fairly big difference between the two. Just because something is big now, juice and cola drinks really aren't going to provide a lot of the growth. Bottled water, energy drinks are. And so companies are responding to that and saying, like, we don't need that bet in juice with Odwalla, and coconut water was the same way. It's not growing very fast, so we can sell that back. But we can make our really big bets in energy drinks. Both Coke and Pepsi made massive bets in energy drinks this year, and kind of follow that growth. Of course, the same thing is happening in beer, and sometimes it looks a lot like non-alc. So if we go to the next slide, that is, on the left side of this is just, I tracked some of this is just the sales of Truly and White Claw that are in the Measure Channel's IRI data I see. So that's not meant to be the entirety of their sales, but it's meant to show the growth rate, right? Which is, basically exponential. and pretty wild. But the brands that show on the right, what I found interesting is the type of innovation we're seeing reminds me far more of the non-alc world than it does traditional alcoholic innovation. So, I mean, you're seeing a ton of flavors. So we've got, lemonade, hard seltzers, and iced tea or hard seltzers coming out. You've got everything from lower calories like the White Claw 70 to the Pabst, which is higher ABV. Vizzy is very interesting because you're starting to get into the added antioxidants, added functionality, which is like the core of all innovation going on in the non-alc world right now. Is becoming much more about what function you're adding to the drink on top of it. You can argue high ABV and low calories, are somewhat functional benefits as well. And you're getting different ways to play it. So you're getting both international plays, but you're getting a lot of spirit-based hard seltzers as well. So, 3 years ago, I might have said hard seltzer looks like doesn't look like traditional F&B. It's very specific and low cal and, low carb kind of, and now it's kind of branching out into looking, looking a bit like everything, right? So it's a much harder category to define. And I think that's kind of classic what we're seeing across the non-alc world. Categories are blurring everywhere. So if we go to the next slide, one of the things I thought was interesting is, I showed you the classic categories of beverages and how we expect them to change over the next 5 years in terms of water and energy drinks. A lot of the drinks coming out right now are hard to put in those classic categories. So they're blurring lines, and they're blurring lines in a way that says, Driftwell on the left is a new Pepsi drink, and it says water on it, but it's not a water drink so much as a specific wellness drink. It has an ingredient in it that will help you relax and maybe go to sleep, hence Driftwell. It's designed specifically around that ingredient, so it's not designed to compete in the water space. It's designed to help you. It's designed to compete in the sleep aid relaxation space, right? And so that's a mind shift of how you think about beverages, right? It's not, I'm going to roll out, the beer equivalent wouldn't be like, I'm going to roll out an IPA. I'm going to roll out a drink that goes into this exact occasion or, in this meal. We have a couple non-alc or new type kin of non-alc, House, Drink House has, additional ingredients, but they have some of that nootropic, right? So they're supposed to give you a little bit of a high or intoxication in a different way, right? Or a feeling of enlightenment, whatever their, wonderful marketing words are. And then we see a lot on the health side. So like, I have a brand that has keto on there. You might see more than trying to be a smoothie or compete in a certain category. You'll compete based on the ingredient, based on the functionality of keto. What's interesting about that is where that might be in beer is the highlighting of ingredients first, probably matches up with the highlighting of certain hops and certain beers first, right? So you may have, instead of just saying like, hey, I want an IPA to get X flavor, you might just say like, no, I really want to highlight Citra. And, we're going to do that across a number of different categories within beer, right? It doesn't have to be a hazy IPA to do that. And increasingly you're seeing that not happen. And so it's about putting either that flavor profile, that ingredient, that kind of taste first, as opposed to thinking about like the category, like, okay, I just need to roll out an IPA, hazy, at this ABV, and I'll do it X way. It's more, innovation is being led by the ingredient and the functionality first, and then you're just finding whichever category you can put it into. And that's becoming a lot more prevalent, certainly in the non-alc space, but, we're seeing that in beer as well. Last two, if we go to the next slide, I'll be pretty quick. I just want to touch on the economic environment a little bit. What we're seeing in terms of the recovery. So on the left, we're just tracking flights, and on the right, we had restaurant bookings. The next two slides are with the help of our European economists. So if you want to put your thinking caps on to translate the dates on there to the day, month, year style, you'll see what we're talking about. But what's interesting is, while the flight recovery has been pretty consistent, you can look at that restaurant data from a couple different countries and see it's pretty wildly all over the place. Our economists kind of predicted a W-shaped recovery, right? So after the first wave went away, we'd have a bounce back, another wave would come, we'd have another, kind of recession. We're living through that a bit. The recovery has been really messy. Obviously, we're expecting a lot more, as bank in the second half of 2021. But it has been that, of course, our segment, if you're in beer, you're in beverages, the hospitality segment has been hit the hardest. If you go to the next slide, it just shows employment rates in the U.S. across a number of different categories. And you can see that, kind of that hospitality categories on here are among the most difficult, the hardest hit. And, even though they've recovered a lot from the initial lows, they're still not in great shape. Having looked at a lot of on-premise data, thinking about on-premise recovery, across the U.S. and across a lot of Europe, we kind of feel that end of 2022 is when we might start to get back to 2019 levels in terms of on-premise revenues. And so that is going to be pretty hard. We can be hopeful that a new stimulus package will be a little bit more directed at hospitality and be more direct. We've kind of, certainly in the U.S., struggled a little bit on the actual help for hospitality as opposed to other segments of the economy. But we are, it's hard to say optimistic. It will be a messy recovery, but we do see most of the on-premise coming back, and we do kind of expect the long tail of smaller and local shops. Again, as we said, consumer desire hasn't changed. When the on-premise is ready to recover, we do expect kind of that long tail to stay fairly healthy, even if there is a little bit of lag. If someplace is closed to reopening, the long term is, if the consumer desire stays the same, we expect that to stay the same. With that, I'll end and see if there are any questions I can take before we head to break.
Yeah, thanks, Jim. Just a reminder. Okay, here we got some questions that came up, and this is actually one I was thinking about. Do you see CBD making its way into the beverage world anytime soon?
CBD has been making its way into the beverage world for a couple of years now. It does seem like a really slow rollout, kind of functionality on beverages like that. So one, there's a regulatory issue. There's plenty of production side issues as well. Like that's not a supply chain that's particularly well defined. I think the challenge there is, in a difficult regulatory environment, you're also trying to convince consumers that this product really is, has efficacy, right? And that's difficult. A lot of the products we tried, the amount that's in a beverage is pretty low. We haven't seen necessarily a lot of the big companies. Even when a big company has made a bet, they've made a very small bet on CBD. Most of it has been startups, so it's really local. It doesn't kind of have that, the sort of whole industry behind it, where consumers start to get that confidence because they go in, they see it everywhere, and they're like, okay, everybody's rolling out CBD. This is definitely worth trying. It's still really in the early stages. So I think there's definitely some room for that. That would probably play more exclusively in the non-alc segment, at least for a good while. Certainly would make sense in the in the non-alc beer commodity. CBD is kind of a natural product, but I think we're a long way from seeing that as kind of a widespread. Although it's worth saying it matches with all consumer trends, right? So wellness, immunity, those are things that are booming right now. So there are definitely some tailwinds for it.
This one tags on a little bit about the different trends on that non-alcoholic craft beer. Have you seen that in your research, or is that showing some signs of growth?
It certainly is showing some sign of growth. The category is still obviously very small, but growing very well. There are a lot of new entrants to it. I think the more we see proper entrance from bigger competitors in that space, it's going to take off. But I think you're already seeing a grocery store shelf that'll have a couple new options. And if you think back to where it was 5 years ago, it's a totally different world. And as those brands also develop, some of their brand portfolio, like a lot of people have a brand out there and they may have 1 or 2 SKUs, right? But then you can get into that wellness. So you're seeing Vizzy come out with antioxidants. Like that's the sort of thing that is a natural fit for non-alc beer. We haven't progressed to that state yet, but there's a lot of room, I think, for growth there. Both, honestly, in the on-premise a bit as well when that returns, but especially in the off-premise.
So just a reminder, we're at the 5-minute mark on questions before the break if we stay on schedule.
5 minutes. Okay, Ann?
Hey, Dave, quick question. On the e-commerce side, we had hoped that we would ship our convention beers this year, and of course found out that you really can't, although you can ship wine through the mail and through various means. Is this an area, and maybe Bart Watson is a good one to chime in on this discussion, but what do we need to do to get to the point where we can have Beer of the Month Club and do beer shipments through the mail or through other carriers like wine has that opportunity?
Yeah, I'll let someone else chime in, but it does take a fair bit of lobbying to do that, and it is intensely complicated right now. Even within the wine world, it may seem more simple, but if you look at what's going on behind the scenes in wine, it's intensely complicated on that side as well. For now, hearing about a lot more things happening within each state, and so if I'm thinking about how kind of direct beer shipments are going to grow, it's going to be for at least the near term, it's really going to be within a state. So if you're a craft brewer, you're going to build out a subscription program or something within your own state for now. I think there are people doing it a little bit, in multiple states, but it is pretty complicated.
Interesting. Just in Oregon and Washington and New York, where basically there is no indoor dinings, have you seen around the country? Has there been other states that are open? Do you think there's a resurgence to return back to the brew pub or to indoor dining stronger than it was before? Your one chart showed it was in Europe and then it got shut down again.
I think everything we see shows consumers cannot wait to get back out. Either when certain consumers when it's allowed, and other consumers when they feel safe. And of course, when they feel safe is a wide question. So I wouldn't expect some kind of massive, like someone's going to flip a switch and we're all going to show up back, because there are going to be a number of people who feel uncomfortable. But the desire to eat and drink in public and socialize and have the big gatherings, right? This is like a core human behavior of millennia. So this is not something that's going to go away at all. So I do, and that's why when we say, we kind of predict 2022 returning 2019 levels in terms of the on-premise across a number of categories. That's restaurants and coffee shops and everything else. But everybody does want to go back.
Okay, I think we have time for one last question. And I'm going to go down to this one that was asked, that said that it was mentioned that it was terribly difficult to market to millennials. And I think we saw in your chart that the younger age, the older age is drinking more, but the younger are drinking less. And it says that they didn't make buying decisions until they were in the beer aisle. And how do you see companies approaching this now? And how are they are companies trying to sell more to millennials? Is it through e-commerce? What do you think?
They are absolutely trying, and I'm not a marketing expert, but a lot of that comes down to consumers, the younger consumers. You find them in different places than you find older consumers. So it's not as easy as just saying have someone on TikTok do a commercial for you, but finding your way into, where those consumers shop and where they spend their time is fundamentally different than, even 30 somethings. And so I think, the folks in marketing at every one of the big shops has, have big slide decks on how they're going to approach, finding their way to millennials. And some of this is not just a marketing story, right? Some of this is, are your brands relevant, right? You could do all the marketing work you want with kind of a last generation brand, but it might not resonate with millennials. And some of it is just finding your way into the shops that they go to as well.
Okay, thank you very much. We've reached 9 o'clock. And so we'd like to once again thank Jim for this session, and also Rabo AgriFinance. I think Jackie has state to tell us a little bit if she about the poster sessions, and also where we can go from now. But after that, we're going to take a 15-minute break, and then we'll start again with our next session.
Yes, thanks, David. So just a reminder to please take time during the break to visit the virtual trade show, and you'll see that a link has been added in the chat. It's AmericanHopConvention.org.
See you in 15 minutes.